Ladies and gentlemen, good day, and welcome to the Matrimony.com Q4 and FY'25 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jairam Shetty from ICICI Securities. Thank you, and over to you, sir.
Hi, everyone. On behalf of ICICI Securities, I would like to welcome you all to quarter for FY'25 earnings call of Matrimony.com. From the company, we have Mr. Murugavel Janakiraman, MD and CEO. Over to you, Mr. Janakiraman, sir, for your opening remarks.
Thank you, Jairam Shetty. Good evening, everyone. I am proud to share that we have crossed a significant milestone of 25 years, helping millions of people to find a life partner. Reaching this milestone is a testament to the enduring strength of our values, the dedication of our associates, and the trust placed in our brand by millions of members, partners, and shareholders. FY'25 was the very first year in our journey of 25 years where we had a degrowth. However, we started year-on-year growth from March onwards. Our year-on-year growth continues in April and May. With the various initiatives and strategies, we are highly confident of continuous growth in the coming quarters and the years to come. We have decided to pause wedding loan as the conversions are not at the expected level, and we may revisit in the future. We have changed Astro Chat to Astro Free Chat and offer 5 minutes of free consulting. We are organically generating over 1,000 downloads per day and a few hundred consulting per day. We are still nascent stage on this initiative. This year also marked the successful completion of our second buyback in the last 2 years. Now coming to the results. In quarter 4, on a consolidated basis, we achieved a billing of rupees 114.8 crore, a growth of 5% quarter-over-quarter, and a decline of 5.3% year-on-year. Revenue at rupees 108.3 crores, a decline of 2.8% quarter-over-quarter and 9.1% year-on-year. For the full year, we achieved a billing of rupees 452.7 crore, a decline of 5.5%. Revenue at rupees 455.8 crore, a decline of 5.3%. Key highlights for the matchmaking business in quarter 4 are as follows. In quarter 4, the billing was at rupees 113.5 crore, a growth of 4.8% quarter-over-quarter and decline of 4.8% year-on-year. Revenue at rupees 107 crore, decline of 2.8% quarter-over-quarter and 9.1% year-on-year. For the full year, the billing was at rupees 448 crore, decline of 4.7%. Revenue at rupees 450 crore, decline of 4.7%. We added 2.5 lakhs paid subscription during the quarter, a growth of 3.3% quarter-over-quarter and decline of 9% year-on-year. We added close to 1 million paid subscription during the year. AT for the matchmaking business grew by 1.7% quarter-over-quarter and 4.5% year-on-year, in line with our customer acquisition strategy. For the full year, ATV grew by 2.7%. We created about 22,000 success stories in the quarter. Now coming to the marriage services business, billing was at rupees 1.2 crore, growth of 19.1% quarter-over-quarter and decline of 36.6% year-on-year. Revenue was at 1.3 crore, a decline of 0.8% quarter-over-quarter and 4.8% year-on-year. For the full year, the billing was rupees 4.7 crore, decline of 46.4%, and revenue was at rupees 5.9 crore, a decline of 34.7%. Loss in the quarter for the wedding services and also for the new initiatives put together was rupees 4.9 crore as compared to the loss of 3.8 crore in Q3 and 2.4 crore in FY'25 quarter 4. For the full year, losses were at rupees 14.5 crore as compared to loss of 10.3 crore in FY'24. On the billing and outlook for quarter 1, we expect growth in matchmaking business year-on-year and also growth in wedding services revenue year-on-year. Which means the billing side as a growth year-on-year. Let me pass to Sushanta on the key profitable highlights. Sushanta, over to you.
Thanks, Muruga. Good evening, everyone, for joining us today. Our EBITDA margin for the matchmaking business in in Q4 is at 17.7% as compared to 18.7% in Q3 and 19.1% a year ago. For the full year, EBITDA margin for matchmaking was at 20.5% as compared to 20.9% in FY'24. Marketing expenses are at 46.7 crore as compared to 46.2 crore in Q3 and 47.9 crore a year ago. Marketing expenses for the full year was at 185.2 crore as compared to 182.5 crore in FY'24. Excluding marketing expenses, our margins in matchmaking are at 62% in FY'25 as compared to 60% in FY'24. On a consolidated basis, our EBITDA margin in Q4 are at 10.8% compared to 12.4% in Q3 and 14.2% a year ago. For the full year, our EBITDA is at 63.8 crore as compared to 73.4 crore in FY'24, a decline of 13.2%. Tax net in the quarter is at 19.8% as compared to 17.65% in Q3 and for the full year 21.65% as compared to 23.42% in FY'24. The lower tax rate in current year due to long-term capital gain tax benefit on account of holding period of our investment and to lower tax rate compared to last financial year. PAT is at 8.2 crore, a decline of 17.9% quarter-on-quarter and 30.3% year-on-year. Share of loss from our associate Astrovision is rupees 1 lakh in Q4. PAT for the full year is at 45.3 crore as compared to 49.6 crore in FY'24, decline of 8.6%. Cash balance is at 324.3 crores and return on capital employed 14.2%. On the outlook for Q1 FY'26, though we will have year-on-year billing growth in Q1 FY'26, however, due to lower billings in Q4 FY'25, the Q1 PAT will be better than Q4. However, it will be less than Q1 of last financial year. We expect year-on-year PAT growth from Q2 FY'26 onwards. Other announcements in quarter as follows. The Board of Directors at its meeting held on 15th May 2025 have recommended a final dividend of 100% subject to approval of shareholders. I would like to end with customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statement that may be made from time to time by or on behalf of the company, unless it is required by law. Thank you. And now we are ready to take questions. Handing over to Jairam, ICICI Securities. Thank you.
Thank you, Sushant.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rishabh Shah from Bugle Rock Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, we have entered the North Indian market, which is dominated by Shaadi.com for quite some time. Okay, now we spend a lot of money to gain market share out there. So, were we able to gain market share over these years, and what steps did you take to win market share out there?
Thank you, Rishabh, for asking the question. So yes, it's important that North India, other than North India market, we are a leader across India. So North India definitely it's a market we like to grow our market share and win in the long term. So we are at this point of time, what we are looking at is that we are looking at having a continuous visibility because it was not the case last couple of years. So we optimize our marketing campaign strategies. So only for the last couple of quarters, we are having a regular visibility in the North India market. We intend to continue our visibility in the North India market so that we could gain market share in the long term. So it was not the case in the last few years. It was more of on and off. Now we definitely looking at regular advertisement in the North India market. Apart from that,
Bharat follow-up. Okay, sir. Please continue.
I'm sorry?
So please continue, sir.
Yeah. So we also, apart from BharatMatrimony.com, we also add our community matrimony as a strategy to grow in the North India market. We are looking from, apart from Bharat Matrimony, whether it could also promote the community matrimony in North India market. But considering the TV spend, we have to look at the best way to promote the community matrimony in North India market. So we are looking at the combination of Bharat Matrimony and the community matrimony. Maybe in the future, we may also look into the other, taking other brands in North Indian market. So it's not looking at Bharat Matrimony, maybe a combination of brands possibly. Again, these are the something, but at this point of time, we are looking at a regular visibility in the North Indian market.
So just a follow-up on this one, sir. As you said, it has been 3 years. So what changes have you seen up till now, or we're not able to crack that market itself?
No, as I told you, it was, first of all, we didn't have that regular person in the North Indian market because that, the way the overall marketing spend and with the challenge of having that spend in the North Indian market. Now the way you have, optimized and the way the budget is getting allocated. So definitely we are looking at regular persons. I think one of the reasons that we didn't have the regular person in the North Indian market. And we see that with the revised communication strategy, regular persons, and we could believe we could able to penetrate or gain market share in North India market.
My second question is, so last year the advertising spends were 39% of our top line. This year also it is around 40-41%, and it has been increasing consistently despite our efforts into marketing and advertising spending. Sir, we are not able to see the revenue increasing at that pace. So what am I missing out, sir? Could you please help me out in this? Because I understand that this business requires marketing and advertising spend. But sir, we can't just keep burning cash, although we are not getting fruits out of it.
So last year was one of the years where, that overall industry had a degrowth in the profile. And again, what it has to do to the post-COVID effect where during the COVID time there's a surge in the profile. After that, there's a thing. I think we see that things are getting normalized. We see that year-on-year growth in the profiles. So while in terms of marketing spend as a percentage of revenue, when the revenue starts moving up, the marketing spend as a percentage of revenue will come down. We don't see the marketing going to increase from the current level of spend at this point of time. So the marketing spend will remain at this level, maybe at slightly at less level, or maybe you can assume that at this point it will be at a similar level. So the revenue increases, so we see the percentage of spend on marketing will come down. So.
Okay, so my last question is, matrimony caters to which segment of the crowd? Is it the people who are not there with their families who stay alone? Or they think they stay alone, so they think to find a match in community is better, or people also living with parents also register on matrimony?
I think matrimony is a very broad basis, not segment of the people. It's in 25 years, there's millions of people users sign up with the service on a yearly basis. So I wouldn't say that only one segment. So whether the individuals looking for taking the lead or the parents are taking the lead, we may know the majority of users are individuals themselves. So definitely the way that the matrimony industry has transformed the way Indian people find a life partner. So what it was 30 years ago, the parents were in the driver's seat. To that today, the youngsters are in the driver's seat. But again, they also take the consent of parents. Yes, there are certain parents also use a platform. However, the majority of the individuals also use a platform. However, it's all marriage happens with the consent of parents, but the youngster being the driver's seat. So it's a broad base. It's not limited to one segment, and it's across the tiers, across the segments, across the globe. Yeah.
Thanks, I'll get back in the queue. Thank you.
Thank you, Rishabh. Yeah.
Thank you. We'll take our next question from the line of Damodaran from Equitas Capital. Please go ahead.
Thank you, sir, for the opportunity. My question is on capital allocation and, similar to the previous participant. So the question is on ad spends. Now, over the past 4-5 years, we have increased ad spends, but we have grown slower than the second largest player. At least, their numbers are available till FY'23. And this one reason obviously could be because online matchmaking has a deeper penetration in the south versus other geographies. But in this current year, despite all the increase in ad spends by the entire industry and you as well, revenues and profiles have declined. So in light of all this, do you really think that you need to spend so much on advertising? And because while you're increasing ad spends, revenues have not really kept pace, or penetration has not really improved significantly. So don't you think you can do away with the ad spend a bit, also considering the fact that the third largest player has regained their, Jeevan Sathi has almost touched their 100 crore revenue, from which they had actually declined over 2-3 years ago, and they have achieved this while cutting down ad spend. So do you really need the current level of ad spends? That is the first question. I'll ask the second question after hearing your response.
Regarding that, so we look at the third player, in fact, it was a revenue, probably to go back to the thing, it was a revenue they were doing in the past also. So there is significantly stepped up the marketing. That significant stepping up of the marketing for them did not yield the desired result. Then it was changed to a different model. Now they do spend money on marketing, but again, it's gone back to the early level of the marketing spend and limited to only one geography, which is North Indian market. So it's more like gone back to the earlier level. So I would say that was the reason for the reduced marketing spend. That revenue gone back because the only increase in marketing spend going after various markets did not yield the desired results for us. With respect to our marketing spend at the elevated level, because there are other players as well. So at this point, the marketing spend at the elevated level. So if the competitive intensity reduces, we will reduce the marketing spend. But at this point of time, there are players that are spending at a similar level. It's important for us to spend that equal amount of marketing. Plus, we also the multiple brands. Now we also the new brands like Jodi. We are investing in those brands to grow those brands, Jodi as well. So in terms of the growth, we see it as I said. So while the last year was one of the years, the entire industry had some challenge in the profile growth. Now we see that the profiles are bouncing back. So started March, we are having year-on-year growth, and continuing in April, continued May, and so when the growth happens, then we see that now the marketing, in the past the marketing spend has gone up. Now we expect the marketing spend to remain at a similar level, or it may even come down also. When the revenue increases, then marketing spend percentage will come down, and also profit will increase. In case of the achieve progress, if the competitive intensity reduces, we may reduce the marketing spend. So look at, and second thing that because of it's only TV is one side, other is also the Google, other thing, because of the increased spend, that the marketing spend also goes up, that the cost of acquisition also goes up and all that. So the thing is that, the marketing, we don't expect to further increase, either remain at the same level or it may come down. Also, we have to keep in mind that now we are using similar marketing spend also to promote our other brands. So we started investing in the community matrimony, we started investing in the Jodi. So basically with the same marketing spend now started investing in other brands as well. So those initiatives may yield results as well.
Sure. Okay. But correct me if I'm wrong. You said in the Q3 call, in the previous call, you said that you're going to optimize on certain spends. So what is the plan? Were you referring to marketing solely, or were there other spends as well which you had in mind for the coming year that you plan to optimize?
So we definitely see that there will be increase in TV spend that may come from the online. There's some optimization happen on online, and we're able to flow back that into the TV, because in North India where you are not investing sufficiently. Now we're starting actually Q3 onwards, we're starting investing in North India consistently. So it's also coming from the way they optimized and organize our marketing strategy and marketing campaigns. So it's coming from, plus also we continue to do leverage technology, AI to run efficient operations. So wherever you're able to optimize, and we continue to do that. So in terms of that, as I said, the overall the market will remain at the similar level, but still you can able to continue investment in North India and also invest against the other brands of matrimony. So it's all coming from the same marketing budget. So it's remained at the same level, but I just want to tell you that we are investing against multiple brands. So it's not only Bharat Matrimony.
Okay. The other question was on, the new initiatives. So as I look at your P&L, you have increased, the costs have gone up in marriage services. So it's currently, around 6 crores for the cost. So, and your overall loss, as you pointed out, is around 15 crores. So, are any of those businesses close to break even, which you have kind of alluded to? You had plans of breaking even in the marriage services business earlier in FY'24. So are we anywhere close to breaking even in any of the new businesses, or what is the outlook there in terms of how much capital will we need to spend? So can you give some update there?
So basically, all this includes, the marriage service is only one part of it. The losses includes marriage services. Even you had tried a wedding loan and many jobs. The investment is happening. So wedding loan, as I said, with the conversion not at expert level, it is yet to pass. And with respect to many jobs, so far you have been almost invested in the last couple of years. And the monetization for many jobs will start very soon. So maybe next month or maybe a subsequent month. So we reach a desired level of registrations and the employers, and we intend to monetize in the near future. So far they're all investment mode. So with respect to wedding services, the initiatives on weddings, the Make My Wedding, we expect to even 100 plus paid bookings. So there are some interesting things happening. So it also includes Astro-free chat. So all this put together for an initiative. So we definitely see that the growth happening because as I told you, many jobs we going to monetize in the coming months, and we hope it's becoming a kind of successful. And based on the success, we foresee Tamil Nadu to figure out the strategy for other markets going forward. It's not only wedding services. And now the wedding loan has been stopped, so we may see some the losses coming down because of that business being passed.
Sure, got it. So it will be in that same range of 10-12 crores for this year as well. Is that how we should look at it?
Yeah, probably with a better clarity, when it's going to start monetizing, maybe 1 quarter down the line, we'll have better clarity. Maybe at this point we can assume maybe 10 crore or less, yeah.
Okay. Sure. I have some other questions. I'll fall back into the queue and then.
Sure.
Thank you.
Yeah.
Thank you. The next question is from the line of Vasudev from True Value. Please go ahead.
Hello, good evening, sir.
Good evening, Vasudev.
Hello?
Yeah, yes, Vasudev. I can hear you. Please go ahead.
You can hear me, no?
Yes,
congratulations, sir, on your silver jubilee.
Thank you so much, yeah.
Thank you. Looking at your figures, sir, there has been a decline in all aspects, billing, revenue, and profit, sir. And the earlier speaker has pointed out your nearest competitor, Shadi, almost takes the 400 crores. What is the management slightly become complacent about growth, sir? And what are the steps you have taken to shore up the revenue, sir?
So I don't know whether the revenue number of the thing which is not in the public domain. So in terms of our initiatives, we're definitely taking various initiatives to grow. As I said, last year was one of the years where in the 25 years we had a degrowth because overall the industry had a degrowth in the profile. So in the absence of the information about the players, and I'm not able to comment on them because we only have the published number of few years ago. And sometimes the possibility of the like will maybe some strategy would have worked better for them. And however, we are taking steps, and we definitely see that we are once again back in growth. And as I told you, last 3 months we are having year-on-year growth. And the outlook for us, we believe that this various initiatives, be it a product initiatives, be it on the product side as well as on the marketing strategy to drive the profile, plus conversion strategy. We definitely see once again the back and the growth part. So starting this year, we see that on a quarter-on-quarter, where actually Q1 will definitely have the billing growth, but it may take one more quarter for the revenue growth to happen because there will be a 1 quarter gap between the billing and revenue growth. So we see definitely the growth is coming back and the profit will also move up because the market is going to a similar level. So I feel now we are once again back in track. It's not that the management has become complacent. Sometimes there are phases we go through, but we are definitely very resilient, and we have done some interesting stuff as well on the product side. On Bharat Matrimony, we can also easily navigate to the community matrimony. We have done the product integration. So if someone creating a profile in Bharat Matrimony, same day they can deactivate a profile in community matrimony. So like that, we continue to do various initiatives. So we feel confident of the growth which already happening. Not complacent. Definitely, we're all the more upbeat and the team is very agile and focused on driving in all aspects.
Hello, my next question, gentlemen, is you are having excess cash, whatever you are having, you are giving in the way of dividends and buyback, sir. Why not you go for acquisitions or mergers, sir?
So if there is we've done some investment in the past and acquisition. If there are any right opportunity, we definitely look into it. But we achieve progress. We continue to keep these options open in terms of any opportunity to acquire a company related industry. So we don't actually find any opportunity occur in the matchmaking business, matrimony business. But if there are any related or growth opportunity, we definitely look into it. So that's something achieve progress. We definitely not looking only organic growth. We definitely look at inorganic growth strategy as well. So that's one of our growth initiatives. Maybe so far we are not focused much on. Maybe in the coming years, we may look at opportunity invest big in the company.
My last question, sir. When the new CFO you are going to appoint, sir?
Next month, yeah.
Next month. Thank you, gentlemen. Thank you for your time. Thank you.
Thank you, Mr. Ward.
Thank you.
Thank you. The next question is from the line of Ankur Jain from Prayas Capital. Please go ahead.
Yeah, hi. Thanks for taking my question. Mr. Muruga, I had a couple of questions, and the first question is about the profiles. So we see that the industry had a degrowth in the paid profiles last year. So did did the industry degrow in the free profiles as well? Because that is the number we used to have a couple of years back, and now we don't have that number. But directionally, was there a degrowth in the free profiles as well?
Yeah. That industry growth, what I meant was it is based on the information got from Google. The overall industry had degrown on the profile last year. Again, I feel it has to do with the COVID effect because of COVID, there was a surge in profiles. I believe that some other people who probably advanced the registration because when they're sitting at home, probably nothing else to do, they probably advanced the registration. Possibly that could be one of the reasons. But having said that, so we also done our marketing strategy. The way we done the various online and offline strategies. Once again, we see that we are back on the growth, both in terms of profile and also our other initiatives also. Now we have started growing actually. So for last year, yes, there was a growth interest rate on the free profile. That's the information we got from Google. Yeah.
Okay. Thanks. And another question is about profiles is that about monetization of profiles that most people they create their registration on different websites. And on matrimony, they are taking a free registration, so they are able to see profiles, of the opposite members of the opposite sex. And do you face this problem where the people who are on free profiles, they check the profiles and then look for contacts on Facebook and LinkedIn in order to avoid paying the fee? And do you face this problem? And if yes, how do you tackle this problem?
These are very, very insignificant the problem because maybe rarely people may do it because I don't think it will be accepted by the opposite member nicely that if someone doesn't want to pay money and and contacting outside the medium. That sort of shows that the character of the person. So whether someone wants to get married to a person is something people need to think. So we don't see that as a problem, but very rarely do come across, but we don't see that as an issue actually. So our conversion percentage remains strong, and we are looking at continue to look at various initiatives to increase the conversion percentage as well.
Okay, great. And another question is on the Google billing, this issue. So what's the update on the case? That is one. And I read in the notes to account that Matrimony changed the business model in order so that it is not covered by that particular payment system. So could you please update on that overall issue? That is one. And in the interim, is Google still invoicing Matrimony, and are you still paying 4% what was directed by the court earlier?
No, actually, it's not the case because there's a CCA verdict against Google that the Google billing was abuse of dominance. And on the user choice of billing, against CCI, the investigation is going on. There's a directive by CCI to the Google. And recently, NCLT also upheld the Google order. So at this point of time, so we are all the protected. There's no issues, there's no payment to Google, and so it's not required. With respect to the globally, there are a lot of developments also happening. You might have seen in the Apple, there's the verdict against Apple in the US court, that Apple has opened up the payment policy, which Apple is a much more vault in the global market, and the judge went heavily against Apple, saying that in fact they initiated criminal contempt against Apple as well because not obeying the court order. So the Apple immediately opened up that the people can communicate the payments in the app, so only for the US market. So globally it's happening. So it's a matter of time, because India already, the Google payment policy was held abuse of dominance, the user choice of billing initiative going on. So at this point of time, so we are protected, and we hope it continues.
Okay, so just to clarify, Google is not invoicing in the interim, and there are no payments that you are making, as per the earlier court order.
Yes, yeah.
Okay. And finally, finally, my question on the wedding services business, that the break-even that we envisaged, that has not come, and the profitability still seems little distant. So, are there any plans to exit certain segments like mandap, etc., where the bargaining power of the mandap owners may be quite high and the fruits, are not reaping? So, do you have any plans to exit?
No, actually, we don't mind exiting things where we feel that it's not working out. Actually, wedding loan, one thing we see at this point of is not required. But again, the wedding services, the new model, what you are trying to do is make my wedding, where the customer need to pay money to avail wedding services. And by facilitating the service, we also get the commission from the service provider. That's something we are working on it. And apart from that, optimize the cost and the wedding services, trying to achieve the break even. So this new model launched a few months ago. We are now crossing this month 100+ booking. And again, we have to fulfill the service delivery to get the commission. That's something we are working on it. So again, but again, the losses not only a wedding services, because it's also include the investment on many jobs and other initiatives as well. As I told you, many jobs we enter to monetize in the coming months. So we hope, I think the wedding services to break in. It's not about breaking the wedding service, it's more of accelerating growth in things. So we are continue to try out things. If things works out, then the scale up will be much better. But it's more like you want to get that right, that sweet spot and right the point of the growth where we are confident is and scaling up significantly. So we're trying something. Maybe this year we have some better clarity on some of the initiatives on the wedding service.
Okay, thanks. Sure. Thanks and all the best.
Thank you. Good day.
Thank you. We will take our next question from the line of Madhur Rathi from Counter Cyclic Investments. Please go ahead.
Sir, can you please repeat the success stories that were there in this quarter?
I'm sorry?
Success stories that you mentioned every quarter.
Yeah.
What was the number for this quarter?
22,000.
Okay. Sir, so if I look at our success stories as a ratio to the number of paid subscription we have, Sir, in FY20, it was around almost closer to 14%. And that has been going down every quarter, every year. It's now around 10%. So is there an issue with our like getting people on our platform? That's why we aren't able to grow the billing. Or sir, is there something else that we can't see right now? It might be an issue for this growth to happen going forward, or have we saturated our picture? Or if some bit on that would be very helpful.
Sorry, there's a little bit of noise. I hope you understand.
Yes, yeah, can I repeat my question?
Yeah, please go ahead.
Yeah.
Sorry.
Yeah. So
can you be a little louder? Your voice is coming very low. We cannot hear you.
Yeah, I'll do that. Just a minute. Is it better right now?
Yeah, please go ahead, sir.
Yeah. So I wanted to understand, is there any issue with getting the number of people on our platform, that is the eligible candidates, or is there an issue with people not getting enough out of our platform? Because sir, when I look at our success stories to the ratio of number of paid subscribers that we have with, it was around 15% in. But that has reduced to 11%, and it has been consistently in 11% range for the last since FY21 to FY25. So I'm trying to understand, is there any issue with our platform, or is there an issue where the eligible candidates are not finding enough success rate? That's why they are not subscribing to a longer time plan or something else. So we don't know that.
Yeah. I understood now, and thank you for asking question. I don't think it has nothing to do with the platform. Other thing, the last year also, one of the years while the profile degrowth happened, and also some of the market was it had a prolonging state, a particular market like Andhra Pradesh. So, and also the success story is not something it's not mandated. Right? Some people may inform, some people may not inform. Also has to do with the number of the weddings, number of wedding days, and many things in factor on the success rate being reported. We don't think that's any issue on that front actually, either nothing the platform or other reasons. So we definitely don't see that an issue, and we achieve progress definitely more manageable now.
So how do we plan to increase the number of paid subscribers on our platform? And sir, also we have been trying some pricing strategy that we are following. So if you could just help us understand where are you on that, and if till whatever extent you can, what are the measures that we have taken on that?
On increasing the subscriptions, the paid subscriptions, was that your question?
Yes, sir.
Okay. So the increasing paid subscription is the only two things. One is that you have to increase the overall the profiles members signing up on the platform, and second one is that increase the conversion percentage. So we continue to take steps to do the pricing strategies to drive the conversions and for various segment of the customers, and also they continue to drive the profile growth. So the two levers are increasing the profile and increase the conversion. The conversion based on the segmenting, pricing, and the various strategies, and the profile growth, the marketing strategies, and the communication strategies. Yeah.
Okay, so just a final question from my end. Sir, regarding what would be the average time, timing, or what the average time, I would say the timeline package that a candidate would buy. So are there any possibility of increasing the timeline or going from 3-month package to a 6-month package? Is there a possibility for that? Or is there a possibility for going for a lower month package but at a higher price that will drive our ARPU growth forward? So is there any possibility of either of them?
Yeah. So it may take average 9 to 12 months for someone to find a life partner. So we have various packages. We have from 3 months to the 1 year package. So it's ideally better if someone goes for the 1 year package because of the the benefit it's bring and also the cost advantage. But some people do prefer taking or majority prefer taking a shorter duration of the package. But on average, what you've seen is that it takes probably around 9 to 12 months. While there are people who got married with only the first contact, but there are people who take a year as well. I mean, just talk average, it may take to 9 to 1 year to find a life partner. So, but again, it depends on individual. So our push to get people to go for a higher duration, but majority prefer to go for shorter duration.
So can we increase the ARPU growth forward by just playing on these timing of the monthly or quarterly packages? Is there a possibility for that going forward?
Sorry, going forward, what is the question?
Can we, sir, increase our ARPU growth just based on increasing the pricing for these shorter timeline packages and just playing on
understand. Yeah. No, we definitely employ various pricing strategies to drive the growth and also conversion. We continue to do so, sir.
Okay, sir. So thank you so much and all the best.
Thank you, sir.
Thank you. We'll take our next question from the line of Rishabh Shah from Burjil Rock Capital. Please go ahead.
Yeah. Hi, thanks for the opportunity. So
Yeah.
I have two questions. So I wanted a perspective that has the trend and the mindset of people changed rather than going to Bumble or Tinder? Is it better to find a match on matrimony, and why so? Because as we see, there's these apps, the users are increasing at a rapid pace in the last 4 to 5 years. So why would the current generation would want to go to matrimony and find their match? Your view, sir.
So definitely, the matrimony is the most credible, trustworthy, and the intention is very clear. So someone looking for a life partner to get married, matrimony should be the de facto the choice for individuals. So the platform, like what you told, the other thing, people go there for various reasons, so which you may know that. So in fact, the challenge with those platforms is the intent of users, also the percentage of the female profiles. So we don't, definitely when it comes to when people are clear about want to get married, and matrimony is a platform. While there may be some personal user, they may want to, explore and they want to, they may have the intent to get married, but they may use this platform. So one of the reasons we also launched, the experiencelove.com, where helping the people who want to fall in love and get married. That's something you just kind of launched it, we are fine tuning it, we are relaunching it again. So, but definitely when it comes to marriage, matrimony sites are the most and the preferred choice. Well, there may be some personal people, but that's not large enough.
Sir, my second question is, in matrimony, we have many categories for services we offer. So, the elite matrimony which we have, so are we focusing more on that elite matrimony because, let's say, average revenue per user is higher than the rest of the services we have, or how is our time allocated between all the services you are offering to the customers?
No, definitely, we are the pioneers of the elite matrimony. We are the first one in India launching exclusive matchmaking service for rich and affluent under the brand Elite Matrimony almost like 17 years. And but again, the segment of the percentage of population, elite is less. But having said that, it's, as rightly said, it's high ARPU. We definitely looking at growing all businesses and not that, just focusing on one part of the business. We have various business heads. And there's a focus and drive for all the various initiatives or various brands for that matter. But definitely Elite is one of the opportunities. As I told you, we are the pioneers and we help to who's of India to find a life partner. We are large data with the Elite profile and among the industry. So Elite is definitely one of the focus areas for our group.
Okay. Okay. Thanks, sir. Thank you so much.
Thank you. The next question is from the line of Vedant Sarda from Nirmal Bang Securities. Please go ahead.
Thank you for the opportunity. Can you listen me?
Yes, please go ahead,
Sir, my question is, I just heard some dispute with the Google. So, are we currently working with the Google advertising?
Yeah. Google, we continue. Google, we spend a lot of money on Google, yeah.
Okay. Thank you, sir. Thank you.
Yeah.
Thank you. We will take our next follow-up question from the line of Damodaran from Equitas Capital. Please go ahead.
Thanks for the opportunity again. This is so in your opening remarks, you had mentioned that this is the first year that you've seen this big growth. So, is this attributable to some? I mean, are you seeing some structural change in the online matchmaking market wherein people are either shifting to other mediums or looking at alternatives like offline brokers or range matches? Is that what's the reason behind this decline in profile, or is it does it have something to do with the fact that if we are in the southern market and it's already fairly penetrated, and if you want to grow, you have to look at other markets? So just wanted your thoughts on that.
No, actually, it has nothing to do with the people are shifting on their platform. I think one of the reasons is that so normally there's certain percent of people come and there's some increase in the profiles. I think my thing about during the COVID time, there was a surge in the profiles and probably people are advanced that probably got normalized. And so it's not limited to one particular market. It's south or west or east or north. The degrowth was across the market. I believe that's one of the years. And we nothing with any structural or any shift in the category and all. So it definitely is one of the years. And also in terms of the south, no, actually we are the number one player except North Indian market. Be it west, be it east, be it south. So the level of leadership vary from market to market. But North is one market where we are one of the leaders. We definitely are taking steps to grow in the long run. We intend to advertise on ongoing basis. So in terms of things, yeah, it's nothing to do with our strong penetration in southern market. The big growth was across the market. It's not about us, it's overall industry growth as per the Google.
Yeah. So, but sir, correct me if I'm wrong. The profiles on your app are generally there for like 9 or 12 months. So, even if there was a temporary increase during COVID time, that would have normalized in the next year. We are almost 3 or 4 years past. So, wouldn't if there was a normalization that would have happened in FY'22 or?
So again, the degrowth was not, if you look at our degrowth on billing was only 5%. So even talking about, the people at 22, you're talking about 24. It's 2 years after the COVID. So it is that, so that's where it should be seen as. Again, that's one of the logic to it, whether that's the reason or, that's my view based on what you've seen it now. So 2021-22, we are in second phase and second wave of COVID happened. So I attribute could, the drop could be on account of some advance and happening all this. Again, the growth is only a 5% on things, and profile growth would have been some little more than that thing. So however, now we are once again back in the growth path. So we attribute to that one. So I couldn't think of anything else, but I think I do with the category shift or other things.
Okay. And sir, you're internally, I'm sure you must be tracking a lot of metrics, but your customer satisfaction scores and the customer engagement scores, or all those metrics have they shown any signs of something have they shown any decline, or are you seeing something that is that you've not seen there before? So
no,
any cause of alarm there?
No, nothing like that. So taking care of your product continue to get better, and we continue to make a good improvement on the product side, customer experience side, and the metric side as well.
Oh, so you do have, you have ways of tracking customer satisfaction.
Yes.
Sure. Okay, sir. That's all from my side. Thank you.
Yeah. Thank you, Damodar.
Thank you. Before we take the next question, participants, in order to ask a question, you may press star and one. The next question is from the line of Dinesh Kumar, an individual investor. Please go ahead.
Hello, sir.
Yes, Dinesh.
Hello?
Dinesh Kumar. Please go ahead. Yeah, please go ahead, Dinesh Kumar.
Yeah, sir. So can you give a revenue guidance for next financial year, sir? Revenue top line growth?
No, actually, we just kind of highlighted what is the coming quarter. So we definitely expect the billing growth to continue the way the outlook for with this year. But we are not sharing or not talking what is the growth percentage for the coming year. Our objective is to continue to drive the growth, but we definitely see that, the billing growth happening in this quarter, and we expect the growth momentum to continue.
Okay.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Thank you so much, Jairam Shetty and ICICI for facilitating the call, and look forward to continue to stay in touch with our investors. And any questions, feel free to please reach out. Thank you and have a good evening and nice weekend.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.